Swami, good afternoon to you. Thank you for joining us. Are you excited that he quoted your piece in that press briefing?
I have to confess that it seems to me that politicians are very poor at explaining some elementary concepts. I do not think me that he did a very good job of explaining the issue. I mean, the way I would have put it is that, look, the Tendulkar line is an extreme poverty line. We used to be extremely poor, and we have raised 130 million people above extreme poverty. Rangarajan will come up with a moderate poverty line. And let us see what that line says. I imagine that even on moderate poverty, we have raised 138 million people above the moderate poverty line. I would have put it that way. I think that would have been a simpler way than his asking for a blackboard and chalk and all kinds of other issues.
You know, that's the finance minister. At least he's focusing on the good part here. Swami, the most important message which I guess has come from today's press briefing is that the finance minister is confident that in the second half of this calendar year and the financial year, the Indian economy will pick up, and he's confident of meeting his targets. Is he being realistic here, or is he being slightly optimistic?
No, he is a finance minister desperately trying to talk up markets and give a feel-good impression. That's his job. I do not think the realities of the marketplace have changed because of this particular speech. The outlook is not, I'm afraid, very good. And this is reflected in the falling stock markets. He's quite right in saying part of the reason for the falling stock markets is the withdrawal of money from all emerging markets. It's not just an Indian phenomenon. But without doubt, there are some very, very bad vibes if you talk to Indian businesses. They are not investing. He himself says people are not investing. Why are you not investing? Why are you going abroad? Please show that same confidence about India. Which is another way of saying that right now Indian businessmen are not showing as much confidence in India as Mr. Chidambaram himself is showing. There is that gap. It has to be bridged. As of now, I see no concrete signs of an industrial turnaround or GDP turnaround. A lot of people are in fact revising growth estimates downwards, just as the RBI did. So while we can hope for a better second half, till now there is no clear, unambiguous evidence that such a happy event will in fact occur.
The other talking point, Swami, is the fiscal deficit target, which he says, 4.8% will not be breached. And everybody's trying to work out the math there because the growth projections are varying. While the finance minister is confident about 5.5% to 6%, the RBI yesterday downgraded growth to 5.5%. How do you see the roadmap here? He's also talking about $80 billion coming in terms of capital inflows. What do you see as to be the picture there?
Yeah. The fiscal deficit target is in danger. It is endangered by the fact that with the sharp depreciation of the rupee, a number of things happen. The cost of imported fertilizer, imported oil goes up. To that extent, other things equal, there will be a tendency for the oil and fertilizer subsidy to go up. There will be a tendency for various other costs which involve imports also to go up. So there will be a pressure to spend more from the budget. When he says, I will definitely hold it to 4.8, I think we must all believe him. But he will hold it to 4.8 by slashing plan expenditure as he did last year. And slashing plan expenditure may look good in the short term for controlling the fiscal deficit. But it does worsen the long-term problem that if you are not doing this kind of spending, where is the next year's growth going to come from? So I said, he is caught in a cleft stick. And I don't know whether the international economy will turn, whether flows into emerging markets will come again. But the fiscal deficit issue is going to create a problem, I think, either way. As far as the current account deficit is concerned, he has put out saying, I am going to raise at least $80 billion. He has talked of some new interesting way of doing so. They don't seem very keen at this particular point on a sovereign bond, although it's an option. Instead of a sovereign bond, they are going for quasi-sovereign bonds by asking public sector undertakings to borrow the same money. So, okay, it can be the oil companies, it can be the banks, it can be various large public sector undertakings, he said, go and raise the necessary money. He has also said that we will take a look at additional NRI long-term funds. So even if there's no sovereign bond, there's a possibility of an NRI bond. He has said we will liberalize long-term external commercial borrowings. So in other words, if there is a long-term thing, maybe 7 years, 8 years, maybe lift all limits on borrowing of that kind. And finally, he said we'll speak to the sovereign wealth funds or the pension funds. I'm not sure what he's going to discuss, but presumably these would be either ways of increasing disinvestment to those particular bodies from the public sector and meeting his targets. It could conceivably even be a sovereign bond issue that is actually placed with the sovereign wealth fund. So these are all interesting ideas of funding the deficit. But he is saying, meanwhile, I am going to bring the deficit down. He said there's going to be import compression of non-essential goods. This is an interesting thing. Obviously, one clear case is gold, where definitely they are compressing imports of gold through a number of administrative measures. But it almost seems as though he is hinting on higher import duties or some other non-tariff barriers, on some other things which he regards as non-essential. It would be interesting to see what those are.
Comes largely. But Swami, should one give the finance minister benefit of doubt on two accounts? Number one, monsoon, and number two, because of a weak rupee, the Indian manufacturing sector could get globally competitive.
The monsoon till now is definitely a plus point, unambiguously so. I mean, there has been a shortage of rainfall in the eastern region, so that region is having some stress. I mean, astonishingly, Patna has had half the rainfall of Chennai. It should be absolutely the other way around. So, but despite that, overall, there are so many divisions, 18 divisions with excess rainfall. So the monsoon is a definite plus for the economy. That's quite clear. Whether this will translate into an export push, partly because of good monsoon, because we have significant agricultural exports, and whether the depreciation of the rupee that we've seen quickly translates into a bigger export push, it is possible. I would add, however, that all emerging markets are suffering from a slowdown of exports. It's not us alone. It's not just an Indian issue. And if the whole global market is stuck there, I am less optimistic about the export surge than about an agricultural surge. But yes, higher agriculture is a plus point. That is something to play on.
Swami, I also would want your comment on, whether or not India can go ahead with a sovereign bond issue. Yesterday we had the RBI governor talk about, India not being ready at this point in time, and an issue like this making India vulnerable to external shocks. However, the finance minister is saying that it's definitely an option on the table, but they're not going to rush into it. What are your thoughts on the preparedness for an issue like that?
My conclusion would be that in this financial year, they will go for PSU issues and not a sovereign bond. That is my overall conclusion. That, PSU issues, it's quasi-sovereign. You see, if you go for a sovereign bond issue, some people will interpret that as a sign of panic. Also, it will come on to your official debt of the government of India, public debt. If you do it through a PSU, it doesn't come into public debt of government of India. It remains on commercial companies' books. And you will get almost as good a rate for those guys to borrow. So it does make sense that, say, if I wanted to raise another $10, $15 billion, let's do it through the PSUs as a quasi-sovereign issue rather than as a pure sovereign issue.
Swami, what could be a quick fix for UPA 2 before the next election? What can they do in next 6 months, next 8 months to really, turn things around?
There is no quick fix. None. What they are doing is the painful thing of reform and trying to convince people that we are living now in a better climate and a better world, and they are not having very much success. If you just look at the commentaries that you get from Indian industrialists and foreign industrialists on what are the conditions for doing business in India, these are not good. We had Mr. John Kerry and others coming here, Mr. Joe Biden. They all carry with them messages from US industrialists complaining of difficulties of doing business in India. Chidambaram himself says that Indian businessmen are showing more enthusiasm in investing abroad than in India. So we need to fix the investment climate. He has produced a list of supposed reforms in the last 1 year, some of which may be implemented, but some, as there's a lot of devil in the details, like FDI and multi-brand retail. Over and above that, he says the cabinet has cleared all these projects, environment committee has cleared these projects. Okay, but those clearances have to be followed by massive investment orders that first of all generate activity in capital goods and then spread the confidence downstream. Till now, we don't have a clear sign of that happening. If that starts happening, then I think the climate would change. There is a chance that it can still happen in the second half of the year. I would say there is no certainty yet. Let us hope. But let us also prepare for the fact that there seems to be problems in translating the new attitude of the government into actual strong economic activity on the ground.
Swami, final question from my side. We've got a GDP number from RBI yesterday. You heard the finance minister today. What is your GDP number for FY14? After budget, it was 6%. Are you bringing it down?
Well, I think the RBI governor has less reason to spin than the finance minister. So I think yes, I would imagine that the RBI governor would be closer than the finance minister, and I would not be surprised if the actual figure is lower than what the RBI governor has suggested. It could well be lower than 5.5. It could be as low as last year's 5. Some pessimists say if you don't turn around the second half, it might be below 5. We cannot rule that out. Let us wait and watch. There are some positives, especially the monsoon. A whole lot of other things are not so positive.
All right, Swami, many thanks for joining us. Swaminathan Iyer, who's a consulting editor with the Times Group. Thanks very much for your views and analysis on what the finance minister just had to say.